Welcome. In this video, when will ZBCN coin rise? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. First, we observe a distinct downward trend in the chart. This trend indicates that the price has been consistently moving downward and repeatedly reversing from certain resistance levels. However, the prolonged continuation of such a downtrend may suggest that the market has reached a turning point. The break of this downtrend is a crucial step for the price to escape the downward movement and begin rising. When this breakout occurs, it will establish a solid foundation for the market to start its upward movement. Investors typically view such breakouts as a positive signal because breaking through previous resistance levels shows that buyers are gaining strength, and the price is likely to start moving upward. These technical levels can create buying opportunities and may initiate a new market momentum. After the breakout of the trend, key support and resistance levels will form for the continuation of the upward movement. This is a process that investors closely monitor, as a breakout often marks the first step toward the price reaching a new level. If this breakout is strong and sustained, it is expected that the price will rise further and the market will shift more decisively toward the buyer's side. For investors, such a breakout creates potential profit opportunities. When the price moves above the downtrend, it often signals the start of a larger upward move. This allows investors to capitalize on the rise for higher profits. After the breakout, the price may test previous resistance levels and continue rising, supported by these levels. This scenario can increase confidence in the market and lead more investors to buy. In conclusion, the break of this downtrend is not only a technical event, but also a signal that the market psychology is changing, with investors becoming more optimistic and the price potentially gaining upward momentum. This creates opportunities for investors and sets the stage for positive market progress. However, we must not only look at trends, but also consider other metrics. Keep watching. It seems that the area where the price last reacted represents a critical support level. We can clearly see how important this level is for the price, considering both past price movements and current market conditions. In fact, this area holds significant meaning not only from a technical analysis perspective, but also from a market psychology standpoint. The fact that the price has risen from this level before suggests that strong buying pressure was created here, and therefore this area could be a region where the price may reverse again at the current levels. In particular, the price has tested this area several times before, and after each test, buyers stepped in. This shows that the support formed here has been an important level that consistently acts as a significant barrier in the market. Every time the price approaches this level, a sort of bottom has formed, and investors buying here have driven the price higher. Such recurring movements are fundamental in technical analysis, and it's often expected that when the price approaches this level again, investors will react similarly. Furthermore, this support level not only triggers a price rise, but also allows us to make predictions about future price movements. These types of regions act as a safe haven for investors because successful buys have been made here in the past, and the price has risen from this point. Due to the historical effectiveness of this support level, investors may believe that a similar situation could occur again and that the price will recover. At this point, if the price approaches this level again, investors may enter long positions, hoping to receive a strong reaction from this area. Of course, every situation is different, and market dynamics can change, but the past performance of this support level provides a sort of signal for investors. What's important here is that investors understand that these types of support levels are not valid after just a single test. If the price approaches this level for the second or third time, a stronger reaction is expected, which could pave the way for an upward move. In technical analysis, support levels are known as areas where buyers accumulate. These levels act as a bear repellent in the market, preventing prices from falling further. If a pullback occurs toward this support area, there's a high probability that the accumulated buyers will step in, causing the price to quickly move upward. This support level could be important not only in the short term, but also in the medium term. In other words, this support could be a critical point, not just for short-term price movements, but also for broader market trends and trend changes. If the price reaches this level and reacts from here, it could create a good buying opportunity for investors. Particularly, long-term investors may look to buy again at this level, aiming to benefit from the upward movement in price. If the price reacts from here and begins to rise, this could create a sense of confidence in the market, and more investors may view this level as a safe entry point, thus increasing buying activity. This level should be closely monitored. According to Elliott wave theory, The market is currently in the process of completing its second wave, which typically develops as a retracement of the previous wave. That is, after the completion of the first wave, the second wave is seen as a corrective movement in the market, and this correction often ends near specific Fibonacci levels, particularly the 0,618 and 0,786 levels. These levels are commonly viewed as key support points by market participants during a retracement. Elliott wave theory suggests that price movements occur in a certain pattern, and the second wave correction in this theory typically experiences a strong reaction, with the market pulling back from the peak of the first wave. This retracement generally presents a buying opportunity for investors, as the second wave often signals the potential for a buying opportunity following a strong upward movement. Fibonacci levels, in particular, are closely watched by investors as important indicators. The 0,618 and 0,786 levels are considered significant support points during a retracement. A pullback to these levels can provide a solid foundation for a subsequent rally. Therefore, tracking these Fibonacci levels can offer valuable insights into future price movements. The second wave in Elliott wave theory also tends to create a sense of uncertainty among investors psychologically. This uncertainty can sometimes deepen corrections in the market and can be a risky period for some investors. However, when the second wave ends near Fibonacci levels, it can create an opportunity for buyers to step in. Investors typically begin preparing for the third wave, as the third wave is generally considered the strongest and can bring significant profits. When the price reaches these retracement levels, particularly the 0,618 and 0,786 Fibonacci levels, they become crucial areas to monitor for both technical analysts and algorithmic traders. These levels may be regions where buying interest intensifies among market participants. Additionally, these levels indicate that the market is in balance, and when buying occurs at the right levels, a strong upward movement can unfold. In Elliott wave theory, the third wave following the second wave is typically regarded as the strongest. Therefore, investors may expect the second wave to reverse at the 0,618 or 0,786 Fibonacci levels. If the price receives a strong reaction from these levels and moves upward, it could signal the beginning of the third wave. In conclusion, in light of Elliott wave theory, the 0,618 and 0,786 Fibonacci levels are critical for the completion of the second wave correction. A reversal at these levels could create opportunities for a strong upward movement in the price. Investors, by paying attention to price movements at these levels, can anticipate the start of the third wave. These levels represent potential buying opportunities and areas that signal the beginning of a strong trend. Once the price reverses from these levels, the third wave will likely begin. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.